Good day, everyone. I'm Alexia representing Connect Global Group, and I'd like to extend a warm welcome and thank you for today's panel session, GCC Lending 2026-2030, Designing the Next Operating Model. This session is proudly brought to you in partnership with Azentio, and we truly appreciate you spending the next hour with us. To share your thoughts or submit a question during this discussion, please use the question box located at the top right corner of your screen. If we're unable to get to your question during this session, don't worry, our panelists will follow up with you individually after the event. Also, a quick reminder that a full recording of today's discussion will be sent to all registrants within the next couple of hours, so please be sure to check your inbox for that. Now, I know our panelists are eager to dive into today's topic. Bashir, the floor is yours.
Thank you, Alexia. Good afternoon, everyone, and welcome to this panel. My name is Bashir Khouri. I'm the Senior Vice President of Sales at Azentio Software, leading our business across the Middle East and Africa. Having worked closely with banks and NBFCs on their digital transformation journeys, this topic is one I'm deeply passionate about. Today, we're going to be talking about how instant trails, open banking, digital identity, AI, and behavioral analytics are reshaping credit decisions across the region. I'm joined today by three amazing voices who work at the heart of this every day. Mrs. Mehreen Khan from Rakbank, Mr. Suresh Lalwani from FAB, and Mr. Guru Raghavendran from Azentio. I'll let each of them quickly introduce themselves before we jump in. Mrs. Mehreen Khan.
Thank you very much, Bashir. I am Mehreen Khan. I am working in Rakbank, and I am heading the wholesale banking and business banking risk function there. I have about 23 years of experience, and previously I was working with Standard Chartered and ABN AMRO Bank, and very happy to be a part of this discussion.
Thank you, Mehreen. Glad to have you with us. Mr. Suresh.
Morning, Bashir. Hi, Bashir. My name is Suresh Lalwani, and I'm the head of coverage in commercial banking at First Abu Dhabi Bank. And what myself and my team, what we do is we help businesses and companies navigate in terms of, when they have a financing requirement, or if they would like to have a banking requirement, or any kind of banking need is something that, we look after, and helping them grow and, succeed in their ambitions.
Perfect. Glad to have you with us. Mr. Guru.
Thank you, Bashir. It's a point where I have two bankers with me, but I'm an ex-banker. So I'm an ex-banker. I was with HSBC Standard Chartered for 7 years. Then I tried something on my own as an entrepreneur. Back to the corporate world. Looking forward for the discussion with the bankers and you.
Welcome, Guru, and welcome, everybody. Let's just dive right into it. So every few years, the way we originate and price credits get rewritten, sometimes by regulation, sometimes by technology. The GCC is now facing a convergence of instant rates, open banking, digital identity, and rate normalization. Mehreen, maybe you can kick us off. From a risk and policy perspective, which of these forces do you think will most transform the GCC underwriting by 2030, and why?
Thank you, Bashir. That's a very good question. See, from the things that you have mentioned, digital identity is a must. It's a fundamental. Every bank right now has to be in the digital space. That's very, very fundamental. Instant rails, as you mentioned, that will just improve your efficiency, faster turnaround time, time to market, which is essential for underwriting and to be a very successful bank. But if you ask me, open banking data, now this is something which is going to fundamentally overhaul the entire underwriting process. Though we are not there yet, open banking data, I mean, you have to have customer consent, there are regulations needed and all, but see, open banking data, and you all have to be ready for it. It will come soon, and it is going to just fundamentally change. And why is that? See, there are a couple of things. Number one, you'll have access to holistic data. So it's not just your static data that you're relying on. It is your transaction history, your payment behavior, your cash flow analysis, everything. It's holistic data seamlessly integrated with all the systems. It's dynamic. It's not old data. It will provide you better insight into the real-time financial health of all your customers. And I think one of the most important things in this market is it will serve your underbanked sector. So you see, a large part of the GCC is your digitally native population that you have, and also your SMEs and your entrepreneurs, which
100%.
are really the backbone of the UAE economy, right? They may not have access or they may not have the traditional credit history that us traditional banks rely on. So, and of course, you can tailor your products accordingly. But with open banking data, all of this is possible. And yeah, and we live in a country, rather in a world where, especially in UAE, where the government is very, very digitally savvy. All the systems, your DLD, your collateral registry, your data, your credit bureau is all digital. And the private sector is actually catching up with the government. So if you ask me, open banking data is going to fundamentally change how we underwrite.
That's an amazing perspective that you just put, and you are 100% correct. The smart government of the UAE and the way the other governments that are taking things into another level, and the way the private sector is trying to catch up.
Yes.
It will allow open banking to be the main source that will take this to another level. But I would want to take Suresh's input on it, because Suresh, you will be able to give us your take from an operational standpoint. So we got Marin's view from a risk standpoint and how data will provide things, but from an operational standpoint, Suresh, how do you perceive things?
Absolutely. I'd like to second to what Marine mentioned. It is going to be a game changer.
Yeah.
Open banking, once it is fully up and running, and everyone's sort of on the bandwagon, it's going to be a game changer, where based on the customer consent, you are able to look at data from the right sources. Of course, it needs a lot of infrastructure development also. For example, various institutes have to be ready for API connectivity. Your API infrastructure has to be solid. And you got to think more proactively than reactively, right? And you got to be open for those discussions and be sort of less defensive and more holistic sort of a thinking. I'm talking about the mindset, of various institutions that is needed to change for this entire sort of new big thing to be adopted completely well in the economy.
And where do you see from we have two banks currently between Ragbank and FAB. Where do you see your readiness into that? And also, I would like to take Guru's point of view from a product perspective. How is the products that are ready to provide this to take underwriting into the next level as well? Because this is not one point of view. You have the risk, you have the operation, and you have the providers as well. That it's a complete ecosystem that would work together to shift things forward.
Absolutely, Bashir. I think while it is operations and risk, I think it's the technology that's the enabler. And if the technology is not ready, it becomes difficult. So as a part of technology today, what I've seen is all the technology providers are making it API first, number one. Number two, since it's open banking, it's all got to do with the data. So how do you take care of GDPR regulations from a data perspective? Because there are strict regulations from GDPR perspective, which needs to be taken care. Along with that comes the cybersecurity rules and regulations. So from a pure product tech perspective, unless the product inherently has this APIs, GDPR compliance, and taking care of respective cybersecurity laws, it is not going to be easy. So that's a transformation. All the new products and tech have to enable the banks to operate and utilize these open banking policies. That's my view.
Yeah. interesting point of view from three different perspectives, but I believe this is what we're here to do. But maybe we zoom out a little bit. The way we see it, lenders are starting to ask, can we run one unified lending brain across GCC borders? Same models, same logic, but different markets. And that's very ambitious. And then again, I'm gonna go back and touch to you, Marin. From your vantage point, what will take to achieve that? Is it policy, model reuse, or country-specific guardrails? And how realistic is that kind of harmonization to be achieved by 2030?
Yeah, no, that's an interesting question. You're talking about one lending brain across the GCC. So, see, one lending brain, in my view, would be one process, one underwriting system, call it, that you have, which you're saying can be used for underwriting across the GCC. See, while that is possible, we have to recognize that within the GCC, there are different fundamentals for every country, and every country has its own localized issues. So while we can build a process, right? Because the fundamentals of lending, of course, are the same. The rules, the lending principles, the payment behaviors, the fraud detection, the cybersecurity, that can all be developed into a model. But you need to have the localized layers. So, because see, the challenges are there's no, for example, no single credit bureau across the GCC, right? You have different tax implications across GCC. You have geopolitical situation, nature of economy, how the credit lending is done, the payment behaviors of every country. So you have to build that in. So you cannot have a one-size-fits-all approach. It has to be a tweaked approach if you want to have a cross-border lending platform. That's my view.
That's 100% correct view. And then maybe the central banks will have to work together across the GCC and the credit bureaus in order for them to be able to have one single probably policy in order for them to be able to align together for that
There
to
can
probably work.
There can be a policy, but it has to be catered to different regulations of the market, and that's where the human in the loop comes in the picture. So everything, while we want to work towards automation and seamless, integration, the human in the loop is still very important.
Yeah, thank you, Marion. Maybe I will just pass towards Guru. Guru, when we're talking about products and software, every model that you eventually develop needs a surprise. It wasn't trained for. As credit portfolios evolve and more decisions are data-driven, unseen risks can creep in. Yeah, and I believe everyone knows that across this panel. From model drift and biased data to over-reliance on vendor algorithms. And from your analytics and product lens, where do you think the next big portfolio shock will come from? Is it data drift, thin file bias, or vendor black boxes? And how can we detect it early before it hits the balance sheet?
Perfect. Great question, Bashir. The way I see it, I think all the 3 points, the portfolio shocks, data drift, and thin file bias, it boils down to the data again. And how do we build a governing mechanism, some kind of a operating model to address these? For example, you should have predictors like a payroll, e-invoice, cash flow. These are predictors. With these predictors, you can have a playbook. Okay, there are 2 signals. So should we change the model? Should we treat the model differently? Have a champion challenger. Put 5% challenger, 95% as a champion strategy. And you continue to use the predictors, the playbook, to measure the outcome, whether roll rate is coming down of collections, whether lift versus control is happening. So essentially, I think we should use 2 or 3 signal triggers to auto-route the customers and look at the models, how they're behaving, and have continuous assessment of the models. Because the population is shifting, younger population are coming into picture. So the model today may not be the same applicable tomorrow. So how do you continue to optimize the model, keeping in mind the change in population, change in regulation, So it's going to be a continuous exercise, and it has to be explainable at some point in time. It cannot be a black box. It has to be explainable, justifiable, and responsible when it comes to using those models. So those are few aspects which are getting further detailed. The reason being, even from a regulation perspective, when it comes to models, there are certain regulators on specific models. They've allowed us to use regression, for example. For calculation of provisions, the regulator is saying, please use a regression model. Absolutely fine. So even the regulatory aspects will fall into picture. To answer your question, I think it's important to look at the dynamics of the growing population in the model dynamics, continue to assess it, and it will continue to drift. I don't think there'll be an optimized model very soon.
Great point, Guru. Thank you for your point of view on this one. And maybe I will shift a little bit towards Suresh. Suresh, everyone is chasing real-time approvals, and I believe this comes towards your desk every single day. But in practice, something always slows the process, whether it's verification, documentation, or even fraud checks. From your point of view, where do approvals still stall in a T+0 world? And what redesign or process change could truly remove that bottleneck?
Sure. So typically what happens, Bashir, now we're talking about two types of approvals over here. We're talking about, there are two key aspects into commercial or corporate banking, whatever you may call it. The first is, when a client wants to have an account, onboarding of a new relationship. And the second is when the client wants to borrow money, right? Now, there are sort of showstoppers on both let's say sides, where where, let's say, for example, when it's account opening, right, the showstoppers are typically your identity mismatches, identity doesn't go through well, the checks on the identity doesn't go through well. The second is you have KYC and EDD sort of challenges there, and so these are the issues when you have, these are the showstoppers and show blockers. Now, the problem is not that we have the technology, we have the mindset, but the issue is right now, and I'll tell you, this is industry-wide problems. The process of onboarding is fragmented. It's in bits and pieces. For example, if there is an online sort of channel, right? You have, let's say, you can onboard through a digital channel, which is let's say your laptop or your desktop. Then you have mobile phone. Then you have manual channel. So people, these are not connected really well, right? So if you're doing a digital verification on your laptop, you may do a search, let's say, on your mobile, and then you might want to continue with the application on your laptop. I mean, these things are not synced in sort of.
So the omni-channel concept does not really work.
Does not work. It breaks. That's one issue. Second issue is that now that is more internal to banks, and this is not to one bank. This is like all the banks. Let's say we've got legacy systems, we've got legacy processes and stuff, and bankers typically we're not very, very enterprising, right? We always rely on our history, on our past, and then we talk about like, oh, this is what I saw in the past, let's say 5 years back, and this is where I see the future being, right? So we don't let go of the history. That's why there are a lot of these old legacy processes and systems and stuff. While the technology may be great, the government is moving really fast, as what Marine said, right? But there are internal challenges that different banks have, because these banks are very old, right? They're like big giants. So to change something is not easy. So because the issue is that the process is fragmented. Now the solution to this is, if you bring in AI into the picture, and you have not fragmented, but one big process, like one, under one umbrella, right? When everything is sort of, and you think more holistic, you think more proactive from the client's point of view. For example, don't ask a question if you don't need to use that information. Ask that question when you need to use that information at a later stage. For example, when you're onboarding a client, don't ask that, would you be interested in an asset? Why? Right? When the client is just onboarding right now, his mindset is that, I just want to have a bank account. I'm not looking at, right? So these are the things.
You're just gathering information.
Correct. Okay? And what happens is your account opening forms become extremely lengthy, right? And let's say, for example, in a bank there are 10 departments and every department wants to give their views. So that is why fintechs and the smaller size entities are really picking up pace on this, and they are able to come up with really nice solutions which are more proactive and stuff. And that's where the solution lies. I mean, one has to be more agile, more sort of proactive than reactive, and limit and go on need based, right? So you got to have one holistic solution in terms of which is AI driven, and not fragmented pieces when it comes to, let's say, onboarding. And while I've not spoken about lending piece, that maybe we can touch upon another, but this itself is a very big challenge.
See, I believe you're right. See, I believe it starts. You guys have done a workshop probably a week ago, and the message used to be customer centricity, right? But I believe you said it right. You have to be customer obsessed, and when you're customer obsessed, you understand your customer needs and how you can have a better customer, let's not say journey. And also you touched upon something which is the legacy part of the banking system. Because the banking was not really modernized, or was not, it was just a pen and paper, how the banking processes used to work. And then we tried to modernize that pen and paper to be more computerized, but we didn't change that process. We kept that process on a computer system, and then we just kept on adding to it. We added the internet banking, we added the more computerized but the same process. But in order for us to be able to move into a better, I'm the panelist, but I'm just giving my, I'm not the panelist, I'm just giving
No,
my
you're
point of view.
absolutely right.
I believe we need to change the process to be able to modernize it so it can fit all these systems. We're just building systems, but we're not changing the process. And then it's just making things more complicated. And now to add AI to it, where the data is not really ready for the AI, is just adding another complexity layer to it.
Yeah, absolutely right, Bashir. So, I mean, there are a few things that come to my mind. It's better to have a good manual than a bad automated system or a process, right? You rather do things, on Word, Excel than to have a bad. So if you're thinking automation, if you're thinking digital, if you're thinking AI, you got to think holistically. That's one. And when you talk about, let's say, being customer obsessed, and the previous workshop that we had was mainly for our borrowing needs and borrowing clients and stuff like that. Now over there, now look at where the country has gone. 15 years ago, 10 years ago, we did not have a bureau. We did not have VAT. We did not have corporate tax, right? We did not have a registry, right, where you could register assets, right? Decision check bounce used to be a criminal offense. The government has changed all this. Now we have a bureau which is up and running. We have great, and that bureau is very proactive, by the way. They come to us, they talk to us, and they ask us that, how do we improvise on the kind of reports that we are generating and the stuff that we are doing, right? We've got the tax authorities now. Nobody, generally 99.9% people don't lie to a tax man. You got to be honest over there, right? So we have so much authentic data available, right, in good shape and order. And this is clean data, by the way. You got data on the lands department, data from RERA, and a lot of them are thinking API. Many of these institutions are thinking API. Some of them are not, and are not ready. They don't have the mindset to go API. For example, the FTA, the tax authorities, they're not thinking to share the data, but that's okay, right? But we've got a lot of other institutions that are willing to give data, share data through the API route. But are we as an industry, now I'm talking, I'm trying to introspect, within banking, are we really using that data to the fullest? I don't think
that's the question. 100%.
Yeah,
like if you have an asset, you have to use it.
Yeah, so we are still relying on manual, run to the client and get the information, right? There's a source that you could rely on, and you could build your lending models, your scorecards, right, on the back of this great data that is available. So while I'm raising an issue over here, but the fact is that there's work in progress. It's not only me who realizes this. There are many other people in the banks, who realize this, who understand this, who appreciate, now this change in the whole thing. And work in progress. It is work in progress.
Yeah.
There are some products which we have been able to digitize, and time to yes is really, really cut down from few days to few hours, right? But still, there's a long way to go. We can do far better, far more, and we are at it. We are at it.
Yeah, I totally agree with you. Guru, what are your thoughts on this? Like, the product is ready. The products can really support this, can really provide better KYC, KYB, provide all the information necessary for faster approvals. But what are your thoughts on this? Especially that banks are fragmented. Their solutions are everywhere. They're not really relying on the product. So
I think continuing from where Suresh left, Suresh, what I feel is if I split the segments into retail, SME, MSME, and corporate, retail seems more mature today. There are quite a few solutions, things move faster, quicker loans, etc., etc. And SME, MSME is the focus now, which is catching up at this point of time. Corporate, I'm completely with you. I think there's a lot of things yet to start over there, yet to work on digitization. But retail seems much matured. To answer your question, Bashir, what I've seen is exact example when whether it is onboarding or servicing, you have a banking app. The app is done by one person, the portal is done by a different vendor. Then when you click on the app, there's a chat button comes. The chat button is done by a different vendor. So you have different vendors, because if you look at from an onboarding perspective, it's a marketing team which is the budget, who are trying to get different vendors on place. When you look at from operations perspective, it's the risk team giving the budget. They're getting different vendors in place. So what's happening is, I think there are a lot of fragmented solutions for one aspect of a use case. At some point of time, I think they will go through some consolidation when it comes to having a common, simple view across the entire use case. But right now, two points. One, from a segment perspective, retail is much matured. They are digitized. A lot of data, a lot of aspects are there. SME, MSME is a crucial segment which work is going on, as I understand. Corporate is yet to begin, absolutely aligned with Suresh. On the vendor side, I think every vendor is looking for one small opportunity to capitalize. He enters the bank with that opportunity, because I know of a vendor, 2-3 vendors, where the chatbot that you click is a different, it leads to a link which goes to a different portal, and it's an AI-based non-human experience over there. That is provided by different vendor, whereas the mobile analytics is provided by different vendor. So that space is still fragmented. There will be a need for consolidation in that space, Bashir.
thank you, Guru. But then again, let's go to Mehreen. What is your point of view on this, especially from a risk perspective?
Yeah, no, absolutely 100% agree with what Suresh and Guru have already mentioned. I mean, there is, Guru mentioned that retail is pretty much there. And yes, from the mid corporates and the MSMEs and the corporates, they really have to come up the curve in this one. But yeah, I mean, from the point of view of T+0, we are still stuck in this sequential, siloed and linear process, right? And every step has its own challenges. See, the most important thing is the regulation, the KYC, the fraud checks, which is the main thing when you're onboarding a client. And in this day and age, when you're now in your future, you're targeting your young generation, the digitally native generation, and the patience level is literally 30 seconds for them. The gone are the days where you can wait days and weeks when an account used to open. Now they want everything has to be immediate. So yes,
100%.
there is work in so there is work in progress on this aspect of T+0. I don't think we can reach T+0 very, very soon. But already there are many things happening, but yes, we are a digital bank with a human touch in Rag Bank, as we say, and this is where I think more work is required to kill the roadblocks.
And I believe as well, as you rightly said in the beginning, that open banking eventually will be able to help with that, because you will have more data inputs and more information about rather your consumers, your SMEs, or your corporates. Your data is not only related to your financial statement, Your data is not
Yes.
related to your payroll, etc. You have all the information that you would need about the individual or the corporate. You will be able to analyze them beyond the normal information. It's not only the credit score that you would need, it's not only the credit cards that he had, it's a holistic view of the financial capabilities of that individual. Maybe he's not working, but he owns 50 villas on the Palm. So, so
Yeah.
you'll be able to give him a credit line, yeah? So
Yes. Mhm.
it's a better view on how we can really evaluate and proceed forward on identifying risk and credit. Thank you very much for your valuable inputs. But maybe now we can move a little bit towards collection and really analyze how collection is moving from let's give this person a call and see why is he delayed from paying us to being more proactive on it. And this is something that I have been just pushing on, like so it's becoming collection is becoming more data driven, just like origination. So the advanced lenders are currently using early behavioral and transactional cues to act weeks before delinquency, not after. So they're no longer waiting that, you know what, the deadline of payment has moved, but they know that something is going to be going wrong. So, Guru, I'm going to ask you from a technology standpoint, which signals would matter most to accurately predict roll rates? And how can lenders operationalize those insights into real time and have a preemptive outreach instead of just dashboards?
Absolutely. I think, as you said, Bashir, I think analytics is an integral part of the solution today for collections. So broadly, in my view, I'll break collection into 5 phases, like you rightly said. First is the proactive period, where you have data cleansing, the screening, etc. Proactively, you see what needs to be done. Then there's an early collection period, which is the second bucket. Third becomes mid collections, then late collections, then it goes to recoveries. So what usually happens, I believe, is we start with the current portfolio and strategies which we have today. Then you do a risk classification based on the scorecards, which is likely to be early. There's something called, it's called awareness. Before even though the customer is not delinquent, but as a reminder to him, you send a message, there is a due coming up, so that he's awareness. So that's more of awareness that's building up through scorecards. Now, if you look at the concept of various metrics, starting with roll rates, gross flow rate, net flow rate, especially the balance at risk is updated based on the current balance. Then the portfolio gets segmented into strategic specific reports. So this happens, and then you categorize them into different buckets and segmentations of collections. Which model will be useful for which type of customers? Like similar to what Marine was saying earlier, one size doesn't fit all. Even the collection strategy is the same. One size may not fit all. So you'll have to understand the behavioral patterns of the people who are delinquent and look at various scorecards. So today, collections, 2 parts. One has become purely analytically driven, pure analytics. Second, there is some part of self-cure happening, where you use a human-like person to have a conversation using AI to try and see how much you can settle using that conversation of self-cure. Because if you break the collections further, I break it into 2 categories: willful defaulters and non-willful defaulters. For all you know, most of them are non-willful, where probably they've gone through a bad phase, something in the family, so they've not paid this time. Probably they'll pay next time. So how do you distinguish the behavior? You can't give them the same treatment as person who's willfully defaulting. How do you identify those patterns? Those are self-cure strategies which are in place. But broadly, I think it's a mix of pure analytical data-driven collections based on segmentations, number one. Second, using this, you try and use digitization to the extent possible. The reason being, I always look at collections as a profit and loss division by itself. You cannot spend a $10 to collect a $5. You need to be conscious on where you're spending efforts, what it
Yeah.
costs. I think that's where the collections is becoming more of a P&L and analytical driven.
Yeah. Thank you so much, Guru. Mary, I've seen you've gone off mute. Do you have any perspective you would want to add on this one?
No, I mean, 100% collections part also, like we were discussing the underwriting, is like Guru said, you have to segment it into, and the data analytics plays a critical role here. And ability and willingness to pay, which is, your fundamental 101 of lending, somehow we have to distinguish between the two. The willful
100%.
and the non-willful defaulters, and the models are completely different for the retail perspective and for the corporate segment. I mean, it's
Of course.
very, very different. You can really digitize and use AI for the retail, similar to the underwriting. I guess it's easier. The data is more easily available, and if we go into the seamless integration between the regulators and other banks, the data is going to be there. For corporates, it'll be more of a challenge where it's more relationship management driven approach.
100%.
So we will have to take those things into account.
I totally agree with you. And embedding intelligence directly into collection workflow will be a game changer. And I believe this is something that's starting to come, but hasn't really gone into that aspect. Moving on into the next one, I believe the GCC still has huge thin file segments, and this is something that Marine, you tapped into it in the first question. SMEs, gig workers, new residents, where traditional credit data is missing and incomplete. And this is where open banking just plays a massive part. So, Guru, this one is for you. Which alternative signals, cash flow, payroll, network, trade, telco, anything, do you trust most to expand access without adding fragility to the portfolio? And of course, open banking, Mehreen, to your point, that would play a massive role.
Absolutely. I think a few numbers, like Bashir rightly you said, if you look at the population today is around 8.2 billion globally, and 6.1 million are adults where they have banking accounts or credit, etc. Of the 6.1, around 4.8 billion have banking accounts of the 4.8, which means 1.3 are still unbanked globally. The point is, of the 4.8, 3.2 do not have access to credit today, though they have a bank account. And you're absolutely right. That's because of the lack of relevant data for us to provide a credit to them. So this is where I think where we see a lot of data partnerships. In my experience, where we look at alternative data, it started with looking at payments. How do I look at payments as an alternative data? Number one, we've started using telco as an important parameter for alternative data. This is on the retail side where we have payments, alternative data. There are also on the retail side, you look at the social media to some extent, not fully reliable, because when you do a Gini coefficient, what is most workable is relevant payments, like a rental payment is better alternative data than a social media. So this is on the retail side where we have telco, payments, social media, rental payments. These are becoming important alternative data. On the SME side, as we know, like you rightly said, 40% of the contribution to the GDP of a country is given by SMEs, is provided by SMEs. And on the other hand, 40% of the SMEs get rejected for a credit because they don't have the right collateral. So this is where I think Mehreen was talking about open banking becomes important. The data becomes important. In fact, I've seen when it comes to SMEs, I've been in some situations where I know some startups who are evaluating SMEs because SMEs have to procure raw material. When they procure raw material, they have to pay for them. So they maintain a register of how they've paid them. That is a set of data they collect, because there is something which, as a data is available for us to analyze, basis that can I extend credit to SME. So I think SMEs segment absolutely with open banking is going to help. And with like we've seen examples of partnerships with payment providers like Gidia, Network International, etc., which helps us. But yes, this is how the my view of retail and SME is today.
Thank you so much, Guru. But Suresh, what is your point of view on this one, and how can you benefit from these signals as well to create maybe new products or to get further customers?
Of course. So with open banking and with, let's say, if we get more information, of course, it is one area which has been fairly well defined and well oiled is the when you speak about the Network International kind of partnerships and stuff, which is the POS lending and the payment gateway lending on the back of assigned POS receivables, right? So that is something which has been going on in the country for a long time, and it's well oiled. I mean, I can tell you that if there's a good client, having a good POS receivables and stuff. I mean, you will have multiple suppliers, wanting to finance that piece, that part of the segment of the industry. But let's not forget, this is not just this segment is just a very small segment of the overall SME space that you see in the economy. I think there's a lot of work that needs to be done on trading, distribution, manufacturing, fabrication, and small contracting and stuff like that, because you have many entrepreneurs, who are. So we need a lot of information and a lot of data around these industries, which one could sort of piggy bank and develop lending models around that. So it is an interesting time, definitely, and with open banking, it is going to get better and better only.
This will allow us to balance two things, inclusion and resilience, because you will have more information where you can really know how to provide your credit line, and that will allow you as well to provide this credit line to more people who are currently not within the ecosystem of the banking sector.
There's a lot of data available on even trading and customs data, like the type of goods that are coming in the country and going out of the country. So you have Jebel Ali, you have Kizad and all. So there also there's a wealth of data available, which could be sort of
100%. 100%. And to move into the next question, and I think we're going to be repeating ourselves because we've had a conversation where we just didn't. It was a mind-blowing conversation. But the next one is, when even the best product designs fail if the customer drops mid-journey. And this is what you really tapped on, Suresh, when you said the omni-channel is not working because the journey does not actually work. And if you start online, you sometimes cannot continue through mobile, etc. And this question is going to come back to you. So where do you see the biggest drop-off points emerging in omni-channel lending? And what one policy or UX change could most effectively reduce them while staying compliant? So you started it, and then you have to follow up through it.
Sure, no problem, Bashir. So there are a few areas where I feel and I've seen this right in life, like where things are really sort of dropping off, where clients are sort of dropping off, which is you have this cross-channel authentication loops, right? Then you have fragmented journeys across different devices, right?
Yeah.
You have complex onboarding and document uploads that are required to be done because of long forms or whatever, more information asked than what sort of we want to consume at that point in time, right? And post the account onboarding or post the documentation, the service part also remains a challenge, because it's not just account onboarding, but it is also sort of maintenance of documents, and then you do sort of KYCs post the account is opened, and depending on the risk rating of the client, you do it in 6 months, or you do it in 1 year, or maybe 3 years, whatever it may be, right? So these are the areas where there are challenges. Now, when it comes to dealing with vendors and stuff, I mean, I'll tell you, Bashir, this is going to be completely a different subject altogether, because you may have an experience, Guru may have an experience, I also have an experience of dealing with different vendors, right?
Yeah.
I mean, I don't want to sound negative, but at times we are promised the moon when we meet for the first time.
Yeah, no, I totally agree. Sometimes it is negative experience because you
Yeah.
are, as you rightly said, promised the moon and well, you barely sit still.
Yeah, exactly. And only after we had delivered stuff, and then we realized, oh my God, you know what? This was something which was not not expected, and then what you get. So, but having said that, I think over a period of time, let's appreciate this. 10-15 years ago, there were very limited vendors. It used to be the IT division or the IT department, whatever, and then you had the business department, and then you had operations. Today, you're talking about strategic vendors everywhere. So, the technology guys also need to understand, business. How does business
Of
function? How
course,
does operations work? And the business guys have to have some bit of technical knowledge that, what are
100%.
these technologies, what is, API, what is all this? So I think there's an upgradation of skill sets happening on both sides, right? That's
Yeah,
one. And while that happens, we're all on the job, right? There's a task that needs to finish, right? So life cannot wait until, we sort of upskill, right? There is a task on hand. Something has to be digitized, something has to move forward, and there are products that need to get sold. So, and that is why all this is a part of experience. It's all part of journey, right? Where
yeah.
things happen and stuff. So it's an interesting time. It's an interesting phase. Over the last 10-15 years, it was now I think things are a little different, because when we talk, from the business side also, we are also sort of we've upped the ante in terms of our learning and skills. So we also sort of try and understand now, when somebody's coming and offering us the moon, we understand that it's not going to be like this. It is different.
Yeah.
So we select the vendors in a different way, because the yardsticks are changing, things are changing, right? So it's all positive. It's all positive. But what will really sort of improve things going forward is combination of, let's say, one of the things that I have tested, and sort of going through this thought process, is that having single digital identity and progressive disclosures. So if there are disclosures which are taken from the client or whatever, whether it is onboarding, or whether it is a lending sort of a proposition, right? You take disclosures up front, but you don't ask for the full information, but you just say, ask that, what, you'll not be doing ABC, or this is not, you will provide this information at a later date, or whatever, something of that sort. Progressive disclosures and identity checks. If these two things, I think these are the first two sort of things, if they're adopted well in a product, I think it'll really help in terms of limiting those drop-offs that happen in the journey.
I completely agree with you, but also maybe the competitive edge isn't only rate or risk, but also the completion rates. Because like how many of that chunk that is trying to get that loan from you is not even reaching to the end. If you are able to get across all of them because you have an easy application or a seamless journey,
Correct.
يعني maybe we're looking at it from a different aspect. Yeah,
Yeah.
we're trying to get better rates, but maybe those rates they're not reaching that mass. They're
No,
not
you're
reaching
right.
them because they're not reaching the end of your application.
So Bashir, you're absolutely right. This is where the fintechs, like for example, let me take an example of Revolut, right? Then there's another
Yeah,
classic example of US, this company called Cabbage, right? You are asked information that is required for that particular task.
yeah,
You're not asked stuff, and what happens is then your account journey becomes shorter, right? The client gets a quicker satisfaction. I
yeah,
mean, if I were to compare, for example, Emirates Airlines, look at the website, look at their app. I think it's beautiful. Of course, it will have definitely come after a lot of iterations and stuff.
yeah.
Booking a ticket is so seamless, so good, right? And the whole experience of, your trip is there. I mean,
Hey,
I think whatever
2
a
minutes,
traveler,
you book a ticket and you're done.
in 2 minutes you're done, and then your
Yeah,
it's part of your trips. It sends you reminders. You can do your
yeah,
add-ons. It is so seamless, right? It doesn't
yeah,
ask me for ID and password every time when I'm touching. Boss, I just want to check whether I've got my flight timing or if I got my flight date. Don't make me
Yeah.
go through the journey of getting into the password and whatever. Remember your ID or whatever. You missed that, you forgot that, it goes in the inbox. So my point is, one needs to start thinking from the perspective of the client. That's where that whole
Customer
workshop and
obsessed.
that customer obsessed. You got to be
Yeah.
obsessed about it, right?
Yeah.
It's not about being the word passionate has been used, very,
Yeah.
very, very loosely, but
No,
you've
I
got to really
100% agree with the obsession about the customer. Because it's key, because the customer, well, he's the king, right? But you have to understand from his perspective how he needs to be. Times are changing, and as Marine said before, like they can't wait. Like before, you had to go to the bank, you had to wait in line. If you wanted to check your account, you had to. There was the account book, right? And you had to go if you wanted to do a transaction on your savings book, and they had to do the whole thing, put it in the machine, etc. So all of that time, because time was slower, now time is becoming faster, and the whole life is becoming faster, and you have to keep up the pace. So understanding customer is key. Understanding customers' requirements is key, and going with them and the generation and everything. We have to, as banks and as providers, solution providers, we have to be able to provide what the customer wants, not what we think is best for the customer. And that's a game changer.
Absolutely.
And maybe I would leave currently the best for last, because I think we're running out of time. AI. AI is everywhere. In credit today, but not every use case earns the trust. And trust is key in AI, because now if you go to ChatGPT and ask them a question, probably it will ask you something and you think it's good, but that's the wrong answer. So the real challenge isn't building models, it's scaling them responsibly. So Maureen, we're going to be closing with you. And if you could greenlight one AI use case that delivers real impact within 12 months, which would you choose? And what kind of evidence would you need to be confident in its fairness and explainability?
So I would greenlight a use case for the SME market, an underwriting model, and use it simultaneously with the current underwriting that is happening. Make a use case, use that model. How do I assess if the model is working well? I would look at the early warning indicators. How are they playing? Is it in line with what is actually happening in the market? And the bad book ratio, if you're having any non-performing issues, any skips, any early warning indicators that are not working. Okay, because I think Guru was saying that 40% of the GDP contribution is by the SMEs. There's going to be a huge focus on SMEs. They're driving the market. In the future, we will also see all the pushes towards the SME market segment. Even you see a lot of government support coming. You have these government programs, or they're guaranteeing all these, the middle market segment and all. So I would make a use case for underwriting for this particular segment.
Amazing. Thank you, Marine. Suresh, any thoughts on this from your point of view, from operations, from customer obsession, and how you can make that easier?
Absolutely. So this is our core play, right? This is this has been my life, right? SMEs and mid markets or whatever. And absolutely right, Marine. This is a classic. It's a fantastic case, something which has been neglected, and something where AI and digitization can really solve for. For example, one of the things that I thought about is, of course, now you have scorecards and all. You could embed all that, right? But also the proposal writing, the credit proposal writing, the storytelling, right? That also could be done through agentic AI, and you don't need someone to write a story, journalism and stuff like that. You don't need all that. You need simple, basic data information, and agentic AI can sort of work around this, put up a credit proposal, make it really, really fast. And so this is one area where there's a lot of profit to be made by the banks, because most of the banks have burnt their hands in their in the past erstwhile years, but today we are talking about the government support being there, the bureau being there, the tax authorities being there. So there is a lot of good quality, clean data available. And with what we are seeing in the market, with the economy doing really well, I think it's a classic, it's a great use case, and if it's adopted really well by all the banks, it's going to be changing life better for everybody, banks as well as the clients.
Great insight, Suresh. And Guru, maybe we just finish with you from a
Absolutely.
product perspective. What do you
I
think?
think I completely agree with them. I think what we have seen our experience of using AI is on productivity. How do I improve the productivity is the most used case today, which includes generating proposals using prompt engineering, etc. From a SME market perspective, what I feel is coming up is the cash flow forecasting. Now you have a set of financials today based on various factors. How do you do the cash flow forecasting? Whether it's accurate, explainable, etc. I think that becomes the most important one. But as a technology product vendor, the technology helps enable provide this to you. But we need from the banks something like a model risk council who will govern this. Because if you look at all this AI, etc., prompt engineering, it works based on my prompts that I'm generating. It's personalized to me. Maybe the same answer it gives to me may not give you the same answer to the next person, but the data might be the same. So that is where, from the bank perspective, having a model risk council, a journey owners, etc., becomes important. From a technology perspective, yes, these are use cases prevalent, especially on the SME side. On the corporate side is exactly the proposal generation, key success factors, how do you automate, etc. Completely with you. But I think, again, my point is, I think, how do you have consistency? How do you bring in consistency, especially when AI is personalized? So that's where a governance mechanism, some kind of a guideline will be important. That's my thanks, Bashir.
Thank you, Guru. I believe it's a wrap. Thank you so much, Marian, Suresh, and Guru for a sharp and thought-provoking discussion. I believe what's clear from today's conversation is that the GCC's lending transformation isn't about simply going faster. I believe it's about customer obsession. It's about open banking. It's about AI. And it's about being more responsible. So thank you so much for this conversation. It was thought-provoking and it was very interesting. And I really look forward to see where you, ladies and gentlemen, will be taking it from now until 2030. And we will be keeping an eye on. Thank you so much.
Thank you, Bashir.
Thank
Thank you.
Thank you. Thank you very much.
Bye.
Amazing. Well, thank you so much, dear panelists. Thank you for sharing your valuable insights and for spending this hour with us. To our audience, thank you all for joining today's discussion. Just a quick reminder that for any questions we didn't get a chance to answer live, we'll be following up with you directly. You will also receive a recording of this webinar very shortly, so you can revisit the discussion on demand. On behalf of Ascendio and Conecopa Group, thank you again for tuning in, and we look forward to welcoming you to our next event. Wishing you a wonderful rest of